Hi everyone. Today I am going to discuss an important topic, that is reverse charge mechanism. A lot of questions are asked about reverse charge mechanism, why it is applicable, how it is applicable, what is the impact, whether it is a cost to the business. Here the solution. Normally if we are buying goods, the supplier will be charging VAT on it. But here under reverse charge mechanism, when we are importing goods from overseas to Bahrain, then VAT will be charged by us on our purchases. If we are getting any service from overseas, VAT will be charged on our services by ourselves. So this is called reverse charge. We are charging VAT ourselves. Since you are charging VAT yourself, you are responsible to make the payment to the authority. In normal case, the supplier will be paying VAT to the authority. Here, as a buyer, you should charge yourself and make the payment to the authority. So the VAT liability will be accounted under you. I would like to explain this with an example. We are importing goods worth 1 million. Customs duty, assume 5%. So 50,000 will be the customs duty. So on 1,050,000, 5% VAT will be applicable. So that is 52,500. When we import, we make that payment. Remember, since we are using these goods for our business, we are eligible to claim input credit. So when we file the return, we can claim this input credit along with the return. So we are not losing anything here. For the time being, cash flow is required. When we import, we make the payment, cash outflow is there, and when we file the return, we claim the input credit. On a positive note, in the UAE, when we import goods to the UAE, we do not pay VAT at the time of import. We show as payable to the authority, and when we file the return, along with the return we pay. That means we show as payable, and immediately in the same return we show as input credit as well. So in effect, if you are using those goods for your business, we are not physically paying to the authority. The same way, let us expect this kind of change in Bahrain as well. If it is coming like that, we will not pay to the authority while importing goods to Bahrain. We will show as a liability, and when we are filing the return, along with the return, we will show as liability and we will claim input credit as well. So in effect, cash outflow will not be there for business. We were discussing about import of goods so far. In the case of import of service as well, even though there is nothing showing through the customs authority, but if you are incurring some expenses to the overseas supplier, supply of services, you should show this under reverse charge. You should show this as liability to the authority, and if eligible, you can claim input credit as well. In short, reverse charge mechanism is a VAT which you are charging yourself and paying to the authority. At the same time, since you are eligible to claim input credit, you can claim it 100%. So it's not a cost to your business. All the best.